So then in terms of the execution methodology, in terms of money management with the strategy, note we want to be passive at the absorption. So we spoke a lot about where we're entering, how we managed to get ourselves onto this very key reversal. We're looking for the break, or we're looking for the retest of that secondary absorption, before we enter in both variations that was. So whether we were talking about the symmetrical V or inverse, or even the outside engulfing candle, either case, we're looking for that secondary absorption, and that's where we want to be entering in passively. Now, in terms of risk, we obviously place it beyond the absorption point. Again, do note, don't be too tight on this risk. We've got really good risk reward here. So again, you can afford to be a little bit loose. Well, not loose, that's probably the wrong word. You can afford a slightly bigger stop, given that there is really good opportunity as the initiative kicks in. In terms of target, well, as we say, initiative in the opposite direction. So once we get that initiative, whether we extend on the previous extreme, or we retest the previous extreme, or maybe we get a full unwind of the delta and form an exhaustion high or low, those will all be key signals in which you want to look to take profits. Now note, very crucial, this is not something we want to hold overnight. We don't want to assume that the market will continue with the trend, that it is necessarily a key reversal. Okay, that's the real key to becoming a really good trader, is to recognize that of course we'd love to stay short, of course we'd all like to run it forever and make the biggest winners, but objectively that sort of approach is never going to allow us consistency in the long run. Okay, what allows us consistency in the long run is to continue to adopt an exact process. The exact process therefore tells us we are flat by the end of the day. If, however, the market does close with those three parameters, i.e. a nice big tail, big volume, or a cumulative delta in the direction, we will then look to enter with the trend or with the continuation of that key reversal in the following session. Okay, in terms of risk reward, very high, tight stop, and really good reward. In terms of application, it's exact. Okay, there's no guesswork here. We've got a very, very easy entry point, very exact entry point. And in terms of leveraging, we don't tend to leverage, and the reason is not because we're afraid, not because we're not convicted, but simply because, like I said to you, it takes time for a ship to turn. A lot of the time, it's quite difficult and tricky to be aggressive at an extreme in the face of an aggressive trend. Okay, so by the very definition, it's okay to be a little bit nervous to take on this trade, because you are going 100% counter trend, but you're going counter trend based on facts coming from the market. So in that case, we don't leverage. And in terms of a tip, don't panic. Okay, don't panic into the strategy. It will. This trade strategy will provide a really large opportunity, and so you don't have to panic in. Be patient. Wait for those two types of absorptions. Once you get the secondary absorption, don't be afraid to get in on a retest. All right, guys. Let's now move on to the next part of our additional reading section.